All right, guys. This is section five, taking an educated options trade. If you made it this far, I just want to say I'm really proud of you. We're almost done with the course, and now we can actually move into taking real trades. So in this section, yes, it's taking an educated options trade, and I'm just gonna teach everything that you need to tie it all together: basic risk management principles, good habits to build, and just different things that you should do consistently to improve your trading every single day and just like staying disciplined, mindset stuff. Because trading, everything like that. Remember, I told you in the beginning of the course, it's all mental and all management and like emotional management, psychology. And it's less about the actual nitty gritty action of, or not action, but the nitty gritty information or strategy, stuff like that. It's just how you approach the markets and the things that you do in order to protect yourself and stay consistent and make good decisions and everything like that. So let's just get right into it, right? Basic risk, basic risk management principles and their importance in trading. So, risk management, that's different strategies and techniques to minimize potential losses. And it's the only thing that's actually going to keep you alive as a trader. You can make $1 million trading, but if you can't keep it, then you're not a good trader. I'm going to be honest. It makes no difference if you can make money, but you can't keep it. And I'm not going to lie, like, for a lot of the time when I was not profitable, it's just because my risk management wasn't good. I was always really accurate with my analysis, and I would always focus on that aspect, and then I just focus on trying to be accurate and trying to be perfect in my trading and trying to have amazing entries or trying to time the market really well. But I just didn't. My risk wasn't good. My risk management wasn't consistent. Um, Once I got that under control, it changed everything really. And then same thing, emotional control. Your emotions are going to come into play because you're a human. And as humans, we there's something called risk aversion, like risk aversion and aversion to pain. Like losing money is painful. Don't get me wrong. And you're gonna get used to it. You have to get used to it in this game, but those things are gonna affect your emotions. When you have live money at risk on the table that you can lose at any given moment, especially trading options because it's so risky, emotional control and emotional management is going to be again one of the biggest factors in your success. And emotional control and risk management and position sizing, all of these things are directly correlated. One thing will affect the other, and as you trade, as you experiment, as you gain experience, you're going to know exactly what I'm talking about. And fear and greed can lead to impulsive decisions. Having clear risk parameters helps maintain your discipline and keeps you from making irrational and emotional trading decisions that will cost you. And same thing, I talked about greed as well. So, like, you could be up in a trade making a whole lot of money, but you're like, okay, it's gonna go even higher, and you start ignoring the signs that okay, this trade is not gonna work in my favor anymore, and then it starts going against you, and you turn profit into a loss. That's something that's happened to me a lot too, and it will happen to you at least a few times if you don't, control your greed, control your fear, just control your emotions in general. Like always have a plan and stick to that plan. Position sizing, only allocate a small percentage of your portfolio uh, to any single options trade or any single stock trade, crypto trade, whatever. Limit yourself to like 5-10% per trade of your total account. So even a 100% loss, and like say that option goes completely worthless, it won't destroy your entire account. When I started trading, I was trading with like 40 to 50% of my account at a time because I was trying to make money fast. And if I would lose, that shit would hurt because say I lost 30%, 40% on that trade. That's like a 20% loss on my account. Five of those, if I'm wrong 5 times in a row, I have no more account to trade. That's why risk management is so important because it's going to keep you in the game. Position sizing is a part of risk management. Hard stop loss orders. Use stop loss orders to automatically close a position at a predetermined price level. This helps limit losses on a trade that moves against your predictions, moves against your favor, and for options, you can set stop losses that automatically trigger at a negative value. So, say you have an option you enter, and it's fluctuating, but you don't want that option to go any lower than negative 20%. So if you're on a risky option and it moves against you, you won't lose 100% of the money you put into that option. It'll cut at negative 20% instead of cutting, or instead of you losing all of the capital that you put in. So if you combine this with like a hard stop loss with position sizing, now you're really starting to manage your risk and really starting to protect yourself. So you're minimizing the amount that you're losing and trying to maximize the amount that you're making, because you can't be profitable if you're losing the money that you're making, right? Or if you're losing more money than you're making. You always want to make more money than you lose, and in this game you're gonna lose. You're not gonna be accurate every single time. And that's why you have to manage your risk. And then understanding time decay, we already had a whole section on theta and time decay. But just still, you have to be aware of that, because that's another thing that you're going to have to factor into your risk management. Certain options are going to be more volatile. So if you're trading something even more risky, you're going to have to compensate for that with your position sizing, with your hard stop losses, with your emotional control, just with risk management as a whole. And then the biggest thing, set realistic expectations. If you're brand new at this, you should expect 2 years of hard work before you really start seeing some real consistency and real profitability. If you're an anomaly and you already have strong discipline, good management, you learn fast and you study, you work hard at this, 7 months. 7 months guaranteed you could be profitable if you take it that serious and you learn from your mistakes immediately and you follow all of these things that I'm teaching you, and you go through the mentorship, you listen to all of the tips and tricks that I'm giving out, you follow the analysis, you manage your risk, you do everything right. 7 months is like minimum. But most of us, life happens, shit happens. It's gonna take time, and I taught myself this. I didn't have a mentorship the way I'm creating this for you guys, so it took me like 3.5 years. Even though, it didn't take me long to start making money, but it was keeping it. That's what took me the longest. So setting realistic expectations. You're not gonna get rich overnight. You're not gonna get rich in 2-3 years. This is a skill that's going to increase the amount of money you make, yes. But remember, in the beginning, I said you got to treat this. I don't know if I said it actually, but you have to treat your trading like a high yield savings account. Your goal at the end of the day is to save money and grow it, not to lose money, not to get rich. It's to grow your money. Because as a trader, in comparison to investing in the stock market passively, the stock market might net you 10, 15, 20% on a really good year, right? If you get a good entry. As a trader, your goal is to beat that. So if you're trading and you're profitable and you're making 1% growth on your account every single day, by the end of the year, on average, that's like 200% on your account. And those are great returns, but that's like a high yield savings account, super high yield, because you're not expecting to make super big amounts of money right now. You're not gonna be like those gurus on the internet that are saying, "Hey, I can make so much money in such a short amount of time. My life is amazing." Nah, like this is hard. Trading is hard. But once you master everything and then you master yourself, it becomes easy. And it's just staying consistent and holding yourself accountable. And again, always trade with a plan. Never enter a trade without a clear strategy. The only thing that works in this market is rational decisions and planned decisions, and reacting to the different things, and just making changes based off the information being presented to you. Overtrading on bad days. So what overtrading is like if you're losing a lot, you might as well just stop trading, reassess what you're doing wrong, reassess why you're losing, instead of trying to win back those losses by taking more trades. It's just like a snowball effect. I do this. I used to do this all the time, and it's always, we're human. It's gonna happen because we don't like losing. I personally, I hate losing. Like, I'm very competitive. I always just want to win. I want to feel good. Like, I like victory, all of that stuff. Over trading, that's just, it's gonna happen to you once or twice. More than that. If you're losing more than usual, so like say you take on average 2-3 trades a day, you might lose those 2 trades in a row, and you're like, I need to take another one, and I need to make back these losses. And then you take that, you lose again, and then you just keep doing that over and over and over until you have nothing. And then one bad day could destroy all of your hard work. There's been times where I've had one bad trading day and I've taken way too many trades, and I could be profitable for a whole month, like whole month straight. 1 or 2 bad trading days in a row of over trading, wipe out all of those gains, wipe out all of that progress. That can happen to you and will happen to you. So just keep this in mind. Resist FOMO, fear of missing out. Sometimes you're going to miss out on trades. Sometimes you might have perfect analysis, you might be right, and you might just miss the timing. Things just might happen too fast and you can't get in. And when you actually go over the live trades, you'll see stuff like that. When you actually start trading and experiencing things in the market, you're gonna see stuff like that. And for those of you who are still taking this course that are already traders or have experience, you already know what I'm talking about when I say resist FOMO. Like, it is what it is. There's always another opportunity tomorrow. Stay focused while trading. Eliminate distractions, maintain high focus. Trading requires full attention, especially because you're trading options and these are higher risk. And it depends on your time frame that you're into. Obviously, if you're swing trading or you're saying, all right, I'm gonna hold this for like a year, you don't have to be as focused, but you still gotta be focused in the moment when you're doing shit. Next, understanding the market sentiment. We went over market structure. It's just understanding the market sentiment. So understanding what the structure of the market, what the context of the market is. So if we're in a bullish market structure, you lean more towards bullish trading. Needs more towards taking longs and stuff like that. Align your trades with the market bias for a better chance of success. That's it. Then develop a routine for discipline. Trading shouldn't really be emotional. You shouldn't be going off of feeling. Regular routines will help in building your discipline. So, wake up 8 o'clock. All right, 8:30 you start. All right, I'm gonna look at the markets. I'm gonna come up with a plan. 9 o'clock you start figuring out where your entry is gonna be. 9:30 you get ready to take a trade. You just developing a routine of preparation that you're disciplined in, so it becomes second nature. So you don't have to think too much about your actions. And then developing a routine of, all right, when I see this kind of say bullish candle, if I see a hammer candle here and it coincides with my support level, this is enough information for me to take a trade. So building that routine based off of seeing certain information and making decisions based off of certain things, having a routine, having a process will make you disciplined without you having to even think about discipline. And regular routines, just consistent behavior, consistent action, that builds discipline over time without you thinking about it. And that's one of the biggest things that will create your success, especially if you focus on that. You will do it very quickly. Accept losses as a part of your trading. Losses are just gonna happen. Losing trades is normal. Just focus on managing your risk, and you will be fine. All right. What else? Reflecting on your trades, especially after losing trades. It just understands what went wrong, how to improve, whether it was something in your analysis, something in your execution, whether it was your risk management. Reflecting on your trades, it's important just to track different metrics and look at the things that you're doing and always just strive to be better the next day. And the next thing on with reflection, people always talk about reflecting on their losing trades. I know that's the only thing I wrote about here, but you want to reflect and look at your winning trades too, because sometimes you can win a trade and it won't be a good trade. Like, you might have not followed your plan, or you could have gotten lucky, honestly. Whatever it may be, always reflect. And another thing is, I want you to always think about reflecting on the actual good trades that you take, so you can know exactly what to look for and refine and get better at recognizing those specific setups that create the most money for you. Um, So you can, whenever you see something similar in the market, because you're like, oh, this kind of scenario worked really well. I made a lot of profit off of this, or it was really easy for me to make money on this trade, or whatever. Just being the fact that you reflected and you know you were in the lab studying, you're just gonna be a better trader in general just because of that. And then this is a technique that I like to use for over trading, right? So self-imposed circuit breakers. It's just like a maximum daily loss limit, and if you hit these limits, you stop trading for the day, or you take a break, or you stop trading for the week, and it just prevents over trading for consecutive losses and protects your account from blowing up. Protects your emotions, and obviously the goal is just to stay alive for the next day. Um, so those are like different habits and different things that you just need to build, things you need to do, and yeah, see you in the next video.